What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at the sell-off that Bitcoin has been experiencing. Right now, we're sitting below $36,000. And obviously, things have looked terrible over the past weeks and months now. But what we're going to do in this video specifically is take a look at who is causing the sell-off. Where is the sell-off coming from? Is it from retail investors? Is it from short-term holders? Is it from long-term holders, etc.? Where is this sale of Bitcoin coming from right now? Because I think fundamentally for you as an investor, this matters. Now, if you're a trader, if you're a short-term trader, I suppose it really doesn't matter who's selling it because the price is the price at this, at whatever the instantaneous point in time that you're looking at the price, that's all that matters. But if you're a long-term investor, this is extraordinarily important. You need to know if the retail market is causing the sell-off and, it's sort of, weaker hands in the market, less experienced investors. Are they the ones causing the price to fall? Or is it people like, Michael Saylor, for instance? Obviously he's always saying that he's just going to hold. So I'm just using that as an example. But that tier of investor, who is causing this sell-off? Because if it's your retail market, well, that's sort of to be expected when we run into situations of economic uncertainty. But if it's your institutional type investor, then that's a different story. Because if that tier of investor is losing confidence in the asset or the asset class as a whole, then that speaks volumes as to what what your future potential with this particular asset is. So there are different ways that we can look at what's going on right now in order to determine who is causing this sell-off. So that's what we're going to do today. We're going to dive into the numbers, we're going to dive into the data, and we're going to dive into the metrics in order to understand what's happening right now, who's causing this move, as the price is sitting under $36,000. And as long-term investors, can we remain bullish in this particular asset, Bitcoin, and therefore the entire asset class as a whole? So with that said, let's do it. Okay, so the first thing I'm just going to quickly show you, and we're not going to spend too much time on this because we've covered this in other videos, is the supply distribution of Bitcoin. But this is going to sort of lay the foundation for what we're going to be looking at today. So what this does is it basically shows you how many Bitcoin are being held at every price. It's irrespective of time. So this just says that at any given price that you can, we're looking at the price on the y-axis over on the right. And then on the secondary x-axis, you have, this is the number of Bitcoin there. Then you can look here, you can come across and see where these people bought the asset at. And all you have to do is look at the price level corresponding to this area. And so this would be the COVID capitulation event. It means that they accumulated back here in November of 2018 all the way through March of 2019. And then at certain points in 2017. And you know that it wasn't before that because the price of Bitcoin was never that high prior to 2017. Okay, so this shows us at every single level how many Bitcoin are sitting there that last moved on the network at these prices. All right, and that becomes important because it shows us where people are willing to step in and accumulate the asset and hold over time. So for instance, I keep showing this price right here in particular because it's a very interesting level, because this shows us that people bought back at the COVID capitulation event and are still holding. And they bought back here after this capitulation at the end of 2018 and they're still holding. All right. And then what else you can see, and this is going to be pertinent to our discussion today. If you look up here, right in this 50,000 range, all the way up to 68,000, there are a large number of holders from 54,000 all the way up to that $68,000 level. I mean, you have millions of coins sitting up in that range. People that have bought since the bull run started and, were told buy the dip, this kind of thing. And, so they FOMO'd in and now they're just sitting on the asset at a loss. So there's, two ways to look at this. They made the mistake of FOMOing into a bull market, which we always talk about on this channel, that, that's the behavior we want to kind of get away from. But B, they're trying to rectify that behavior by becoming long-term holders. So these individuals are sitting on this asset at a loss now, and it's becoming a significant loss. And all they're hearing about now, all these individuals holding from this 54K all the way up to 68K, all they're hearing every day from every outlet now, prior to a couple weeks ago, all they were hearing was, we're consolidating, heading towards a new all-time high anytime now. But that narrative has shifted as people are starting to realize, the actual macro level events that are taking place, as they've started to realize the gravity of those events. Now we're seeing a shift in the narrative to this is going to be the most epic bear market we've ever seen before. So this is creating a certain level of anxiety and panic within this cohort of individuals holding from that 54K all the way up to 68K. And that makes sense, right? If you were holding there 2 months ago and you're being told, don't worry, this is a normal correction. We see it all the time. We're in this upward trend, and we're probably going to be going to a new all-time high in, at some point in 2022. And now that narrative is quickly shifting over to, this is going to be an epic bear market. We're going to crash from here, etc. That's going to create a certain level of panic in these individuals. All right. So we're going to look at that now. We're going to try and understand, how are they reacting to sort of the shift in sentiment in the market at the moment. Okay, so what this metric is showing us, you'll notice that there are bubbles associated with various price levels. All right. So for instance, we have a level up here at around $63,000, $64,000, somewhere between 63 to 64K. You'll notice a bubble, and it has a size associated with it. The larger the bubble is, the more Bitcoin that was sold. The smaller it is, the less that was sold, but it has to still meet a certain threshold. So, we're talking on the order of like 250 Bitcoin here to register as a blip on this metric. So what you can see with this metric is, over the last 7 days, who has been selling Bitcoin and where are they selling it from? So in other words, when you go, for instance, here, back in June of 2018, right here, when we see this blip appear here, that means someone sold, and you'll notice that relatively, this is a small bubble. Someone sold Bitcoin from that level right there in June of 2018. That means they bought it in June of 2018 at a price right here of around $7,000, and they just recently sold it. Okay. You can see the same thing here in March, the middle of March of 2020. So the COVID capitulation event, you can see someone sold from a price of around $6,000. All right. So they bought the Bitcoin at $6,000, and they just sold it within the last 7 days. All right. This is showing you basically all of the large amounts of Bitcoin that have been sold over the last 7 days. And what we're seeing is, who's selling here? Who are the people that are selling? By the way, this data doesn't go older than 2017. So, if someone is selling from like 2014 or 2013, we can't see that here. However, I'll show you a metric in a moment, which is going to confirm that there's likely no significant selling coming from back in, 2014, 2013. There may be some, but it's not any significant quantity. All right. So who are the people that are right now, running to sell the asset? Well, there's two groups here. So first, you'll notice that there's a huge collection of selling right here. And this is always like this. It's always going to be, a massive quantity of selling is coming from the very short-term timeframes. Your daily trading for Bitcoin is primarily, or, not necessarily primarily, but a large percentage of it comes from short-term traders. So you'll notice that these giant circles here, and this will always be like this. So we're always going to see, no matter what time frame we looked at, it could be over the last 365 days, you're going to see a huge quantity of selling coming from the very short term time frame. But you'll notice what's happening here. You're not getting a lot of selling from people from these older price ranges, ranging from basically anywhere from 25,000 all the way down to, 2 or 3,000. You're not getting a lot of selling there. All of your selling is coming from people that are more short-term holders or newer long-term holders. A long-term holder is defined as someone who's owned the asset for greater than 140 days. And you'll notice that where is all this selling coming from besides the very, very short term? So there are people that bought the asset back here in January. So, now we're talking like in this range from November, December, and January. You're seeing a lot of capitulation now. So these people, they tried to hold, they tried to become long-term holders, but at the end of the day, they just can't do it anymore because they're starting to panic, and you're seeing them start to capitulate the asset. Same thing back here. You'll notice that people that bought at the peak at around 52K or so, and you're seeing also these people that bought anywhere from around 54K up to around, all the way up to around 64K, as well as some individuals who are selling from this 25K up to 40K. The people that bought at January, December and January of 2021, they were sitting on quite a nice profit before, but now even at 40K, they're willing to sell at a loss. Think about it. We're sitting at 36K and they're selling at a loss now. Okay. So there were points when they were up nearly, not quite 75%, but right around there. And now they're taking a loss on their trade. So there's a lot of fear in the market right now, but look at who it's coming from. It's not coming from people back here who bought at these, very low prices where we just demonstrated there are around 1 million coins sitting right at this price range, right between $3,000 up to around $4,000. There are about 1 million coins held there, but those people aren't really selling. You have very little selling coming from the 6,000 to 7,000 price range. So the COVID event and right here back in June of 2018. But the majority of it is going to be, smaller time investors relatively. Obviously, we're talking large amounts of Bitcoin here, but they're people that FOMO'd in. You have to keep this in perspective. There's a lot of people out there with a lot of money that, just because you have money doesn't make you quote unquote smart money. So, these are people that FOMO'd into the market and, essentially just decided to give up from here. They think that the market is going to keep heading down and they're capitulating. So that means that they aren't willing to just sit on this investment at a loss for any amount of time. Whereas if your time horizon is long enough, I think this kind of what we're seeing going on right now, it should sort of support your belief in the asset, because we're seeing that all of the selling is coming from short-term and newer long-term holders. So these are people that have basically, the majority of this is people that have held for less than a year. All right. So these are weak-handed long-term holders. So the last thing I want to show you is this, which just sort of confirms for us that the selling is not coming from a lot of older holders. This is CoinDays destroyed. So if an individual is holding coins and they've just been sitting in a wallet dormant, let's say 3,650 days. So that would be 10-year-old coins. Each coin that you sell is worth 3,650 days. So every single day it sits in a wallet, it accrues 1 day. So every time that it hasn't moved on the network, every single day, it accrues an additional day. So this metric right here is useful because it shows us how many coin days are being destroyed. So for instance, when you see a spike, and we're going all the way back, so our time frame is January 2018 all the way to current day. You see a spike right here, right at this capitulation, this massive move to the downside that we saw. So it's probably a combination of things, but it's capitulation, and it's going to be just your, someone who's been holding coins for a very long time, because these coins that moved here were very old, because you can see that the number of coin days that were destroyed here is significant. And when it's lower than that, that means all of the coins that are moving on the network are newer coins. So they've just been sitting in short-term holder wallets. So these additional spikes you see, like here and then here in July, and then here in February, when you see these spikes like this, these are older coins moving on the network. So someone mobilizing coins from, 2015, 2014, 2016, like that kind of thing. So what we're seeing now, though, is we do not have a large number of coin days being destroyed in this recent move down. I mean, relative to other times, so we'll zoom in here a bit just to show this. Notice that the coin days destroyed are actually sort of in a downtrend. You did have a spike back here in February, but other than that, it's sort of in a downtrend. So that's indicating that older holders, in spite of the negative market events that are going on, they still believe in the asset, and they're not willing to start selling now that we're down here at 35K. So they're sitting on the asset. They're sitting on their investment, and they're not going to capitulate just because, there's a lot of fear in the market that the markets could ultimately head down from here. So you're seeing the only real selling coming from the people we just showed, the people that bought, and in white, we have the price here. The people that bought up at these prices, the people, you're getting a huge amount of capitulation coming from the people who bought from November all the way down to January. So that is where your selling is coming from at the moment. It's from weaker hand investors who got into a bad situation. They're sitting at a huge loss now, and they're trying to get out prior to the asset, potentially going down much further from here. So there's a lot of fear and there's a lot of panic, and ultimately this presents opportunity for longer term investors. Like we've been saying, you never know where the bottom is. The bottom could be much, much lower from where it is right now. In fact, we've talked about scenarios where, the ultimate lowest level the price could get to is much lower than people are, talking about in the crypto space. However, if your time horizon is long enough, if your conviction is strong enough, I still believe that these times when you're seeing the weak hands, the shorter term and newer, longer term holders starting to capitulate, those tend to be the best times to start entering the asset. And, like I said, if your horizon is long enough, if you are viewing the asset with a time frame of 2, 3, 4, 5 years, then, now is very, very likely to be an excellent time to be dollar cost averaging into the market. That's not financial advice. That's just what I'm doing, and that's how I think about the market. But, I think that we've seen time and time again now. We've seen time and time again, just over and over, situations just like what we're sitting at right now, where the price is trending down. It's doing nothing but trending down. We talked about yesterday, we've been in nothing but 6 weeks of a downward move, and people are just losing their nerve now. And there's so much negative information coming out. There's so much negative news in the media talking about the economy, talking about the Fed, talking about interest rates, inflation, etc. And you're going to see this capitulation continue, in my opinion, because as we showed, there are a huge number, millions of coins sitting at levels where people are down nearly 50% now. So, this is definitely, in my opinion, a good time to be dollar cost averaging. With that said, it's not going to be a good time for you to dollar cost average if you're someone who, after you dollar cost average, if it goes down another 50% or more than that, you're going to lose your nerve and then panic sell into, all of the additional negative news that's going to be coming out. So you have to know yourself, know what kind of investor you are, know what your own time horizon is, and know, how much pain and suffering can you stomach before you sort of give up. Like, look at these individuals right here that panic sold right here after this huge capitulation. They literally, this capitulation was the bottom. These coins that were moved right here, that was the bottom. And then what do? They have to FOMO back in. And where do they do it? They probably do it right here, right before we hit a local top, and then there's another series of capitulation events. So you have to know yourself as an investor. You have to know what you can stomach, and you have to know what the situation is. So that's what we're trying to do here, is arm ourselves with knowledge, arm ourselves with, just additional certainty that fundamentally the asset hasn't changed. Fundamentally, the asset remains strong. And you're seeing that the longer term, smarter investors also believe that, in my opinion. And I think the data supports that. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.